Alright, what's up guys? So in today's video, we're going to talk about horizontal support and resistance levels. I'm going to show you how I find them, how I draw them, and how I trade them. And first of all, I just want to give a huge shout out and a big thank you to PrimeXPT for helping me out here and sponsoring me on the channel, giving me the opportunity to give you guys all of this free TA content, and I'm building up this sort of course if you like. So big thank you to those guys. This wouldn't have been possible without them. So if you're interested in trading on PrimeXPT, definitely check out the link in the description below for a reduced fees. And also if you use the promo code LIBS42 bonus, LIBS42 bonus, then we'll get a 50% bonus on your first deposit. A very great deal. Definitely check that out. And the video you are about to see is actually an old video I recorded a couple of months back for a private student of mine in the Burb Nest. So this is actually a good example of the kind of content I'm providing the private students on a weekly basis, and we also do this live where I show all of this live in a webinar, private webinar, where they can ask questions to me. And I cover whatever subject they want me to cover. Alright, so yeah, enjoy the video and see you guys next time. I just wanted to record a quick introductory video for you where I show you how to draw horizontal support and resistance areas and how to trade off them. So I think that horizontal support and resistance areas are super important to, first of all, learn how to draw them and then learn how to trade them. I believe that, at least for me, horizontal levels is the foundation of my trading system and strategy. And I do believe that probably around 90% of all the trading systems and strategies that are out there will base their ideas somewhat on horizontal support and resistance areas, right? So it's extremely important as a trader to really learn and understand what this is. So I think it's very important to really make an effort and put in an extra amount of time on learning these concepts, because they will really help you as a trader in the future. So I just want to go through a couple of things before we actually jump into the chart, and before we actually take a look at how to draw them and how to trade them. So what I first want to say is, when drawing levels, you can't really force them, right? You look at the chart and they should be obvious, right? So when looking at the chart and when looking at levels, remember that you gotta ask yourself, like, does this level make sense? Does it look good? There's no exact rules or exact ways to draw these levels. It's more like an art, right? So when looking at the chart, try to imagine yourself being an artist who's going to draw levels and make a painting, right? It needs to look beautiful, it needs to make sense, and you can't force it, right? You can't force a good painting, right? You gotta let the ideas come to you, right? And the levels need to make sense. And the obvious levels are the best levels, right? If you see a price chart and you tell yourself, like, wow, that's a very obvious support area, and that's a very obvious resistance area, those are the levels you're going to mark out, and those are the levels you are going to play off, right? Like I said in the beginning, horizontal support and resistance levels is what you are going to be using as your base, and you are then going to add on this base. You will add on other indicators or price action techniques or candlestick patterns or whatever onto this idea to add confluence to your levels, right? And the more confluence you have on a level, the stronger that level will become and the more probable your trades will become. And by doing this, you will most likely increase your win rate, right? But it's very important in the beginning to, like I've said before, master horizontal support and resistance levels. And when you know exactly how they work, that's when you add more ideas as Confluence to those. So there's 4 types of support and resistance levels. The first one here, as you can see to the upper left here, you have resistance. And basically what resistance is an area where price finds resistance and it's struggling to get above, right? So you got sellers here trying to keep price from getting above this area, right? And when you have enough sellers so the price keeps bouncing down and never really gets above, that's your resistance area, right? The next one here to the left, the upper right here is the support level, right? And it's exactly the same as resistance, but instead of having an area with a lot of sellers, you have an area with a lot of buyers. So the sellers are going to sell price down and the buyers come in and buy. You see price bounce up, comes down again, bounces again, and that's because you have a lot of buyers down here that will act as a shield or a wall from price to go lower, because the buyers have agreed that this is the area where we want to buy, right? So they're going to try to keep price above. And the next, the third level that you have is basically this. Both of these are SR flips, right? And basically what SR flip means is when a resistance, or in this case a support, flips to resistance, and here you have a resistance that flips to support. And basically what that is if you have a level here that's acting as resistance and you're having a lot of sellers here, right? So, but the more this level gets tested, right, more sellers are absorbed. So with every touch, you absorb, like price absorbs more and more sellers. And eventually the sellers are going to get exhausted and the level will break and the buyers will win, right? So it's a battle between the bears and the bears and the bulls, the buyers and the sellers, right? So here you're seeing resistance, and let's say you have an area here and prices comes up and tests it over and over, and eventually the buyers all the sellers get absorbed and price breaks through resistance and comes down to test it again and bounces off and continues to bounce, effectively making this level a support area. So here you have a resistance area that's flipped to support, right? That's very important to remember going forward. These are the 4 structures, or basically it's pretty much 3 structures, but yeah, you get what I'm saying, right? This is very important. This is going to be your fundament, your base when looking for levels, right? So I'm gonna go through the summary before I actually jump into the charts, and afterwards I'm going to go through the summary again. So remember, higher time frames always comes before lower time frames. And what I mean by that is, if you find a strong level on the higher time frames, like the weekly, that level is always going to be more important than if you find a decent level close, but on like the 4-hour chart, right? You might have a resistance on the 4-hour chart, right? But slightly above that resistance, you have a weekly resistance, right? You always have to make sure that you map out the levels on both the higher time frames and the lower time frames. And when looking at the lower time frames, you need to take into consideration the higher time frames, because That's one of the most common mistakes that new traders do. They ignore the higher time frames and they keep focusing on the low time frames. As a successful trader, and especially when it comes to horizontal support and resistances, you need to take into account both the higher time frames and the lower time frames. And the second thing I've got here is the number of touches, right? So how many touches has a resistance area got, right? So if you're seeing like a resistance on the daily chart and it had 2 touches, right? It's still a resistance, but it only had like 2 touches. If you're seeing another level above that's that had 10 touches, obviously the level with more touches, the level with 10 touches in comparison to the one with 2 is going to be more interesting in case you get a SR flip, right? Because the more touches a level has, the stronger it becomes when the level actually flips from resistance to support or from support to resistance, right? So if a resistance level gets tested repeatedly, it will get weaker with every touch, but when it breaks and when you get the SR flip, it will, like, the numbers of touches before the break will determine how strong that level is, right? And the third thing is recency, right? What I mean by that is, as humans, we are, well, not as humans, but we tend to, we read from left to right, right? So we tend to start by looking at the, the left side of the screen, and we look at the historic price action and we mark out the levels on the left side of the screen, right? But with this, like, what I'm doing is I put more emphasis on the right side of the screen. So the most recent price action. So as an example, right, if I have a level that's looking good with the historic price action to the left, and it's also looking very good with historic price action to the right, the most recent price action, but the right side of the screen shows a slightly different level, I'm always going to go with the most recent price action. So I'm going to adjust the level to the price action to the far right of the screen. And you then have time in play, and this kind of, comes together with the numbers of touches. You need to ask yourself when looking at a level, how long has this level been in play? Because obviously, if the level has been in play for a longer period of time, it's obviously going to be more important and much stronger than if another level has been in play for a shorter period of time. So for example, if you're looking at the weekly level and they have a level that's been a weekly resistance for like a year, that's obviously going to be very, obviously going to be a much stronger level than if you have a 4-hour, level that's been in play for a couple of days, right? And then you have the violence of the reactions, right? So the more violent the bounce is, the stronger the level is, right? So if you have 2 levels where one level sees very, very sharp declines or sharp rapid move upwards after getting rejected or bounces off as support, the more violent the reaction is off a level, I'm gonna go with, the more violent the reaction is, the stronger the level is. As simple as that. So this one right here, I've typed in looks. It should be looked, right? So you look for breakout. When you have a resistance, right, you look for a breakout. You will then wait for the retest, all right? And you will wait for the first test, because the first test is always going to be the best test, because that first test has the highest probability of bouncing, right? So when you had a good support resistance level that's been tested multiple times and it eventually flips and gets ready for a SR flip, the first test will have the highest probability of a bounce. And what I look for is a clean rounded retest, and I will explain to you what that is with details and with examples. And with a setup like that, when you buy the first rounded retest, you put your stops below the last swing low pre-breakout, and your take profit area is going to be at the first trouble area, the FTA, and the first trouble area is the next resistance above. That's the first area where you expect price to run into resistance. Alright, so now that we covered the intro, I will go over the actual chart for you. Okay, so here we have Bitcoin versus US dollar on the Bitstamp. This is the weekly chart, and I've decided to start off with a clean chart. It's going to take a bit longer than if I would have showed you a chart where I already marked out the levels, but I believe that when you get to watch me actually mark out the levels in real time, that's probably going to add another layer of educational value. So what I start off by doing, like I talked before, is always go with the higher time frames before the lower time frames. So with the higher time frames, you always look at the weekly, right? You can obviously use the monthly too, but for the most part, I start with the weekly. But if you are going to chart the levels on the monthly too, which I mean, it's recommended. Why not, right? You start with the monthly and then go to the weekly. So how I like to do it is I look at I got 3 main time frames that I'm watching. Is the weekly, the daily, the 4-hour, and the 1-hour, right? These are my main time frames that I'm drawing levels on, and these are also the main time frames that I'm trading on. I can't really say that I'm trading one of these. I'm trading all of these, right? So every setup that I have is a combination of all of these time frames, right? So you mark out the high time frame levels on the weekly, you go down to the daily, and maybe add another one on the daily, or you adjust the weekly level on the daily. You go down in the 4-hour and the hourly to find exact entries and exact exit and stop loss levels. You go down to the hourly and it's unclear. You can even go lower to the 30-minute, the 50-minute, the 5-minute to find, structure. But it's recommended to never go down lower than the 1-hour when starting out, and focusing on swing trading with going as low as possible on the 1-hour, right? So let's first start off by marking out a couple of weekly levels and what we're looking at. So I showed you the example in the beginning where you have different types of price action reacting to the levels, right? So we want to find areas on the chart where price is either using as resistance or using as support. So let's first, we'll start from the bottom and work our way up. And obviously you have an area here. You can also press the magnet tool, which will help you. It's going to when you hover your mouse below this candle and you press Alt plus H, it will kind of snap the line to the closest candle, right? Let's mark out this low here, and you can kind of see that it's acting as support here, right? And it's acting as support here, and this area here, it's acting as resistance, but you haven't really come up and touched this level here. So I'm gonna mark out this high here too. And if you look at this wick here, it's lower, right? And it kind of makes sense to use that wick here. So we are going to draw, this is 2 SR levels, right? But they're so close to each other that I believe, especially with this wick bouncing on the lower part and these candles bouncing on the higher part, I believe that this is valid as a SR area. So between 2 SR levels, you have an SR area, right? And I like to mark these out as green, support as green, and in the end of the video, I will show you all my templates in TradingView, so you can copy them and have them exactly like I have if you want to. So I'm going to extend this to the right by increasing this number and decreasing this number so that I'm expanding it to the left and the right. And now you can pretty much see that we have a support area here, and this is an interesting area because it's acted as resistance and support, and I like those levels. Those are strong levels that's been support and resistance, and it's been in play over a long period of time. It do not have, like, this doesn't have a lot of touches, but it's been in play for a long period of time, so you can expect a bounce next time you test it, right? Let's move up, and we're gonna add some more levels. We, like, when going on weekly, I like to use like these extremes down here, like this wick here. We'll use the low of this wick. We'll see, do we have an area here? Not really, like not really, right? We got a level here acting as resistance here and support here, so I like that area, right? If we got some more here, we'll continue upwards and we'll see if we find anything. I like this, right? Because if you use this wick here, you will notice that being used as support here. These wicks wick down into support, and you get the open and close of this candle here, and you get this price action here. So I kind of like that level, and it's also acted as resistance here before breaking out. So I like that level, as you definitely have that on the chart, right? And let's move higher to see if we can find anything. So I like the fact that we have this low of this wick is confluent with the low of the wick here. We got support here and support here. Now, just because I don't want this video to be way too long, I'm just gonna go down into the daily, and we're gonna focus on these levels that I got drawn here. And you can kind of also see that you could have an area here between these levels, right? Kind of makes sense. This is, you know, as a high time frame support area. Let's go down into the daily to see if we can, you know, make any sense out of this, right? So right here, I'd like to extend this area all the way down to cover these lows here. I like having it up here so that I've covered this here and these lows here. And like I've explained to you in the beginning, like, drawing levels is more like an art than, you know, exact exact tactics or exact science, right? It's more like, it's definitely, you know, where you place your level is definitely personal choice, I think. Like, where you think they make more sense to have them. Like, there's no exact rules to where you want to have them, right? So here I'm seeing a pretty nice level, right? Let's mark that one out. Because this is the area that broke, and this was the, you know, the area that took us, like, when we broke above this area, it took us up to 10K, right? And you can also see how this area has been in play for quite some time. And if you use, like, it kind of makes sense to have this level here, right? If you use the high pre-breakout, right? So this high pre-breakout, you're then going to use this last high before that one. And remember that I'm focusing on the right side of the chart now. Like I've told you before in the summary, recency is very important. So the most recent price action is a priority. You're going to choose between this low, and this high, you should always choose the most recent price action. The most recent price action is this high here, right? Now I'm seeing something here, right? I could definitely agree that this would be a zone, an area between two levels. So I'm just going to mark that out as a support area, right? Now, I won't really go into any more detail on how to draw the levels, because I think by now you kind of understand what to look for, right? What you want to look for is areas on the chart where price bounces down or bounces up, right? As you can see here, support, right? Here's resistance, and here's resistance. And the more touches a level has, the more importance that level has, right? So the more touches, the more important the level is. Here you have a lot of touches, and it's been in play for a long period of time, right? So it's been in play for 375 days, which is, a long time, definitely a long time. We had a lot of touches, so a lot of touches, been in play for a long time. We also look for the violence of the reactions, right? And what I mean by that is this is a good example, right? You break above, rounded retest, and a very violent reaction. Come down again, very violent reaction, break down, violent reactions, and again, very violent reaction when breaking down. So price really moves strongly when interacting with this level. It's definitely a strong, important levels, right? Now, that's what you want to look for. You want to look for levels, either support or resistance areas, or areas that's been both support and resistance. And like I'll explain to you in a summary, you want to find what I mean by levels that's been support and resistance is basically when support turns into resistance, you have an SR flip. And this is a good example of an SR flip, right? Let's see, here you go. Being used as support here, breaks down. Next time you come up and test this area, you get a move down, right? So here you got support, here you have the SR flip, right? And here you have another SR flip where you break out, retest for a move higher. That's what I'm looking for, right? I'm looking for either strong resistances, strong supports, or areas that the best kinds are the areas that have acted as that have showed multiple SR flips, right? Now let's actually, I want to show you how you actually trade this, right? So let's see here. We have go down into the 4 hour. And try to find a good example of, well, I think this is a pretty good example. Because here you have a level that's acted as resistance. Let's remove this just to make it clear. So this is resistance, right? Something like that. It's red because it's resistance. And here you see price breaking out, right? And with this touch here, you come down for a first retest of that resistance area, the previous resistance area. And that area is now turning into support, right? Red as resistance and green as support. And when you get this breakout, like I said, wait for the breakout. And here is an example of a breakout, but it's not a clean breakout, right? This is not really a clean breakout either, but let me show you the difference here. You go down into the hourly. You will see here that you could have made a trade here, right? Because you have this area and price is breaking out And when price is breaking out, you look for the last high pre-breakout, which is going to be this area, right? That's going to be your last high pre-breakout. What you want to do is you want to long the first retest, right? You want to long the first retest because the first test is the best test. Like I told you before, the first test is the best test, and you want a rounded retest. And with a rounded retest, I mean there's not going to be any touches between the breakout and the retest, right? Here you have the breakout, not really any touches in between the breakout and the retest. Now this is not a super good example, but it's just to show you what I mean by longing the first retest. If you would have longed here, the first trouble area would be, you know, up in this area, and as you can see here, you kind of touch it up here with this wick, right? Stop loss would be, you know, below the last swing low or the low thrust candle, which is down here. So the stop loss level on this one is not really a good one, so I would not take this trade, right? But here on the other side, I'm gonna show you why the other retest is better, because here you have, this is the first retest, right? It would be better if you haven't had this wicks here, these candles here, right in the middle, because that would have been a nicer rounded retest, a clean rounded retest. And when you have a rounded retest, you want price to, you know, stay above the previous resistance area long enough for the market to accept previous resistance as support. We didn't really get that here. It was just too quick, right? But if you look back here, this is different, right? This is different. Here you have the breakout candle, right? And you look for the last low pre-breakout, and it's this one, right? But like I said before, you look at the most recent price action if it makes sense, right? You mark out that one, and this is going to be a priority. But let's go to the left, and you can kind of see how this wick up here really makes sense, right? Because this is the high here, and it's close to the high here, and it's also an area that's been used as support here, right? And here. So it kind of makes more sense to use this here, because this level down here haven't really had the same type of reaction. This area hasn't really been used as support and resistance, but this area up here has. So there's two ways to play this, right? Either you enter blindly on, you put your orders either here or down here, right? Your stop is going to be below the last swing low pre-breakout, which is down here. Either below the last low pre-breakout or the thrust candle, and the thrust candle is this one. But I would probably choose to have my stop below the last swing low, which is here. I would probably enter between this high and this high. So I would put in maybe 3 orders here, right? For an average entry in the middle here. So as you can see here, we got filled on our position by 33% on this one. So this wick down here would have filled a third of our position, right? Now, where would you want to have your take profit area, right? So let's say that if you entered on this wick here, which would obviously have been the best setup, you want to have your first trouble area at the first area where you expect price to run into resistance. And that's obviously going to be at the next closest resistance, which I believe is up here, right? Because you have because this is the last support where you broke down, and it's an untested level. You tested it here, right? That's going to be your first trouble area, and that's actually a good 2R. So this would have been a nice trade just to exit fully here, but I would most likely have taken some profits here. I would then take some more profits, you know, up in this area. And last take profit would probably be up in this region here, right? Because you have, you know, the next level is basically up in this area, right? Maybe even one take profit order here too. So that would say that you take 25% off on each level. That would bring your R up to 3.5, which is definitely a good trade, right? And if you would have just use a trailing stop on your last take profit, you would have gotten maybe a good chance of capturing this whole move, or at least a move up to this area, right? That's how you trade support and resistances, horizontal support and resistances, right? So just as a quick summary, you look for, let's say you want to go long, because if you want to go short, it's exactly the same scenario, right? So if you want to go long, you wait for resistance to break out. The breakout needs to be clean, and what I mean by that, it needs to be, let's look at the 4 hour here, for example. We're right here. So the breakout needs to be clean, right? And what I mean by that is the candle needs to go through the level without coming down to touch it immediately. Let me see if I can find, like here, right? This is not a clean break, because you have price breaking out here, but it comes down and tests this area immediately, right? And that's not something you want to see. Like, this looks kind of like a fake out, right? You come up, you test this area, and then immediately down, right? But here you see something different, right? You see price breaking through, you know, strongly. You get another open and close above. That's your signal to go long, right? That's your signal to enter. So you enter on the last low pre-breakout, last high pre-breakout, which is this one or this one, whichever you feel makes more sense. And if you are not confident in which one makes more sense, I would just layer some bits in this area. And then here you can see like a very powerful difference between this SR flip and this failed SR flip, right? So that's basically it. That's the simplest way for me to describe SR trading, what to look for when looking for levels, and how to actually trade those levels. Now, if you have any questions for me about this, feel free to tag me in the channel, and I will try to explain them as detailed and as possible. In my next video, I will show you how I'm adding moving averages to find confluence with my horizontal support and resistance areas, so that if I have a level that's confluent with a horizontal, I'm going to take that level into priority compared to a level that hasn't had that moving averages confluence. And I'm then going to show you how to add the Fibonacci levels to the chart. And if anything's unclear here, just tag me and I will explain it to you. So yeah, I think that's it, and I will upload this video, and see you in the chats. Take care.